Good afternoon. Welcome to all of our live online viewers. It's Thursday, May 8th, 2014. I'd like to welcome everyone to our live Ask the Experts webcast today. My name is Chris Grams. I'm with the CME Group, and I'll be moderating today's panel of grain experts. We do have two grain analysts, two grain experts today, who will be providing their outlook ahead of tomorrow's May 9 USDA crop production and WASDE reports. Before I introduce them and let them kick off with the heart of our conversation, I want to remind everyone who's joining us live that you can submit questions to our experts in any time during the webcast. Look at the lower right-hand section of your screen. You'll see a little box that will allow you to submit questions. So please begin submitting those questions at any time. I also want to note that we will have an archived version of this panel posted to our CME Group YouTube channel, which is youtube.com/CME Group TV. At this time, I want to go ahead and introduce our two experts. To my immediate left is Joe Vaclavik, who is the founder and president of Standard Grain. Joe is a graduate of the University of Illinois with a degree in agribusiness, farm, and financial management. He's been featured in news outlets such as CNBC, Bloomberg, Dow Jones, Reuters, U.S. Farm Report, Will Radio, and the Wall Street Journal. Mr. Vaclavik authors Standard Grain's market commentary every morning and can be heard each morning at 7:50 a.m. on KFRM radio in Kansas and Oklahoma, and is also a regular guest on Will AM radio in Illinois. Thank you for joining us today, Joe. To Joe's left is Terry Reilly, who's joining us for the first time from Futures International, where he's a senior commodity analyst. Terry has 15 plus years of experience in a variety of research and analysis roles in the agricultural futures industry. Prior to joining Futures International, Mr. Reilly worked at Citi and conducted price discovery for the grain and oilseed futures commodity markets. While there, he provided his customers with in-depth market information through the development of daily market commentaries, in-depth market reports, and customized research materials. Mr. Reilly's expert insights on agricultural markets have been reported by the financial press and other media. He began his career at Gillette in Boston, where he was a demand planning analyst and is a graduate of Boston College's Carroll School of Management. Thank you for joining us today, Terry. And since you are the newcomer to our discussion this afternoon, I thought I would hand the mic to you first and foremost to kick us off with a little bit of analysis, what we might see tomorrow's USDA reports.
Thank you, Chris. Well, in this particular report, this is when USDA reveals their outlook for new crop numbers both in the U.S. and globally. So there's a lot of numbers coming out in this report tomorrow to digest. So I'd like to specifically maybe touch on a few areas that we would look for initially when this report gets released. The first thing that I would be looking at would be the U.S. new crop winter wheat production. There's been a serious drought down in the southwestern Great Plains, and that's heavily impacted crop conditions for hard red winter wheat states. So the hard red winter wheat production number is something I'd be focused on. The trade currently looks for about 780 million bushels, which is above the 2013 level, but well below a 10-year average of nearly 900 million bushels. So anything under 780 million bushels could have a potential impact on overall winter wheat production and also all wheat production for the United States. If verified, we could, when USDA works out their numbers in the new crop balance sheet for the U.S. For the wheat, we could potentially see the ending stocks for 2014-15 show a fifth consecutive year of decline in stocks. If that's realized, it could set up a long-term bullish scenario for that particular market. The second number I would be focused on is the U.S. soybean old crop carryout. The trade currently, their outlook doesn't look for any change, but what the no change in the carryout number doesn't really show is potential changes in imports, exports, and crush. In our opinion, we think that USDA will probably leave their import projection unchanged at 65 million bushels. We do think that exports are overstated at this moment by USDA, and then for crush to be understated. But overall, Our consensus from our firm's standpoint would be for USDA to take down the carryout stocks by 10 million bushels. If that's realized, we could see a little bit of bullish undertone in the market. The third point I would be focusing on is the corn carryout. Much of the trade is roughly about 15 million bushels below USDA's ending stocks estimate, current ending stocks estimate. But in our opinion, we believe that USDA is heavily understating the exports by at least 50 million bushels and the corn for ethanol usage by anywhere between 50 and 75 million bushels. So there is an incentive for USDA to possibly draw down stocks by 100 million bushels. That's our firm's standpoint. But the rest of the trade right now is looking for roughly a 35 or a 15 million bushel decrease in the ending stocks estimate. And finally, the global stocks for new crop on a global basis. This is important because we have a very tight carryout situation currently going on in the U.S. or the global corn balance sheet. The stocks use ratio is currently roughly near a 40-year low. Any indication that any stocks for new crop would fall below the previous year level would be a long-term bullish scenario for corn. The global wheat ending stocks, where the trade is at for that is roughly, they're looking for roughly a decrease of 2 million metric tons. But even if the global ending stocks, in our opinion, were to drop about 10 million tons, it would suggest that the global ending stocks are still relatively at comfortable levels. They're nowhere near the 2007-2008 carryout that where we saw a record run-up in wheat prices. And then for soybean stocks on a global basis for new crop, we don't see that as an issue. The trade's looking for a record 80 million tons, which is up sharply from the previous year thanks to record production output out of South America. Regardless of where USDA puts that particular ending stocks estimate, it won't really affect the long-term outlook, in our opinion, which would be for lower prices over the long term new crop. And that relates to the new crop U.S. soybean balance sheet. Anything over 250 million bushels basically would indicate a comfortable level.
Great, thank you, Terry. Joe, over to you for your perspective.
I'll start off with the corn market and actually go back to December or January. And you go back then 4 or 5 months, and a lot of analysts, a lot of traders believe that our corn carryout for this old crop marketing year would be somewhere around that 2 billion bushel mark, maybe even north of that. Since then, we've seen nothing but a string of bullish reports from USDA, beginning with the January crop production report. I believe that was on the 10th of January. We've continually seen USDA ratchet demand numbers higher since then. We've even received some bullish information in regards to the new crop balance sheets in means of that March 31st planting intentions report. The acreage intentions came in just a little bit lower than expected. So what we've seen here, in my opinion, is very, very strong demand, both domestically and globally, for corn. To the tune of 700 million bushels, essentially better than what the trade had thought just 4 or 5 months ago. So this has resulted, obviously, in a market that's uptrended since the beginning of the year for the most part. Now, on this particular report, I know that the trade in general looks for some friendly numbers. We look for the carryout to decline, carryout projection to decline. We look for better export numbers, perhaps better ethanol numbers. I guess my question here in all of this is, will demand continue to increase despite the fact that prices rallied in such a drastic way during the last 4 or 5 months? We haven't really seen corn demand back off as of yet. According to the USDA, with these higher prices, demand has been relatively inelastic. You look at the export sales and export shipments, things very, very strong. We've already essentially booked 100% of our corn sales for the marketing year, so we may very well need to see that export number higher, but at the same time, you've got to question what kind of implications price has had in regard to demand here over the last few months. I'm not overly concerned about the new crop balance sheet in corn just yet. The market has no idea what kind of weather we're going to see this summer. We really don't have much of an idea as to what type of production is possible. We could certainly pencil in some demand numbers here and there. I guess I'll stick with the average trade guess somewhere in that 1.6 to 1.7 billion bushel carryout number, but I take that with a grain of salt as we really don't know much about production. I will say that planting in regards to corn has moved along very quickly this week. We had some pretty good weather conditions across most of the Corn Belt. I think we're going to make some major strides. I don't think the trade is overly concerned about that, so I'll attribute this strength in the corn market here this week and the last several months to demand mostly. Looking at the bean market, the bean balance sheet is just a mess in my opinion. I don't know how the USDA is going to resolve it or what methods they're going to use to resolve it. We've already booked more than USDA projections in regards to exports. We actually need to see net cancellations every single week for the marketing year between now and the end of August in order to hit that projection, and I don't think we're going to see that. There's been a lot of talk and rumors regarding imports into the U.S. I don't know if logistically it's possible to import the type of beans that the USDA is talking about. I don't know if it's going to pencil out in the end with processors here in the U.S. So there's a lot of question marks here, and I struggle to grasp how exactly the USDA is going to move these numbers around to give us a carryout that's ample at this point in time. You could certainly paint a very, very bullish picture in regards to these new crop beans, or old crop beans rather. In regard to new crop beans, the average trade guess I saw for new crop bean carryout was 300 million bushels. That seems very high to me, given demand that we've seen for these higher priced beans. We've had $14 beans, $15 beans. Demand hasn't backed off. We've got new crop beans at $12.40, and you would think that demand for those new crop beans would be a lot better. Now, granted, we're going to have much bigger acreage here in the U.S. this year, but I just have a feeling that demand for those $12 beans, similar to $4 corn, is going to be a lot better next year than maybe we expect at this point in time. The wheat market is a weather market at this point in time. We know that there's been a severe ongoing drought in the southwestern United States and the Southwest Plains in particular, areas of western Kansas, Oklahoma, your big hard winter wheat producing areas essentially. I think it's a given that USDA gives us a friendly production number in terms of the market. There's no way they're going to go out and put out a trend line yield or anything like that. We're going to see USDA adjust that stuff lower. The question now is, can we catch some rain on this crop during the next 2 or 3 weeks? If we do catch rains, is it going to be too late? What type of demand are we going to see for wheat at these higher prices? So I guess that in the wheat market, especially, and especially the Kansas City wheat market, a lot of this is going to come down to weather. We've seen a really nice rally there to the tune of about $2.50 since late January in that Kansas City wheat market. And I guess going into this report, I'm kind of cautious overall. We've seen these prices do nothing, essentially do nothing but run higher since the beginning of the year, and I don't know if we're going to run out of steam or turn this thing into a much bigger bull market.